Hey guys, this is Mark Loans, your local mortgage expert. I'm here with my buddy Matt Aragona, head of Aragona Associates at Compass Real Estate. I've known this guy since 2007. We met in a former life. He had long hair. I was still bald-headed. I don't want to talk about that. It's a sore spot for me. But we're going to be talking about the local Philadelphia real estate market and what's going on, what we're both seeing. His side is a real estate professional and a team leader who's working with agents all over the area, and then my side as a local lending expert and what I'm seeing from my buyers that are looking in the market right now. So Matt, we were just talking a little bit before as the guys were setting up about what you're seeing in the market, right?
Yep.
And you said something to me that rang out. You said the market's getting soft.
Yes.
Right? What does that mean for you? What does that mean for home buyers right now coming into the market?
So in the city of Philadelphia, in most price points right now, from a buyer perspective, you are able to go look at a property, think about whether or not you want to buy the property, submit an offer, and potentially negotiate price down with the seller. You're going to get inspections included in the offer and a lot more contingencies that you normally were not getting back in the spring market when things were going crazy and going over ask, waiving inspections, all that stuff. So I've noticed that over the past 2 months, we've been starting to see that kind of shift back into a normal market, even a buyer's market where people are getting not deals, but feeling good about the purchases they're making, that they're not going crazy.
Whoa.
Yeah.
That's a big news,
Yeah.
right? For those of you who have maybe started the house hunt earlier in the year, or maybe even the end of last year when it was bananas, that may mean that if you put the house hunt on hold, you can restart that, right? You're not gonna get your feelings hurt as much. I know for a lot of my clients that are pre-approved and looking for houses, that's been a point of contention for them. Obviously, you mentioned specifically the Philadelphia market. I know you work with buyers outside of Philadelphia County because you're licensed in the entire state of Pennsylvania.
Yes, sir.
What are you seeing outside of Philadelphia, out in the suburbs even, like Delaware County, Montgomery County?
So it's definitely slowing down a little bit out there, but I would say it's still an extreme seller's market out there. Still multiple showings, bidding wars are still happening, but whereas in April, May, and June, you were hearing stories of 12, 15, 20 offers in on a property, it might be down to 3, 4, 5 offers in on a property. And when you're competing against less people, you still have a better opportunity of winning the offer, and it's just easier still to get a property. So even in the suburbs, it's worth, if you paused your search, to get back in there and maybe take a look at some stuff again.
That makes sense, that makes sense. And I have friends, all over the country because I'm a real estate nerd, so whenever I go places, I always seek out the real estate people. I've heard similar things, right, from people around the country. They're like, hey, market's tough, but it's getting a little bit easier, right? One of the things that we still want to keep in mind, though, is if you do have a buyer that's going into an area where it's competitive, right? As you say, it's a seller's market still in a lot of these neighborhoods outside of Philadelphia County. What does that mean for a buyer if they have to get financing? What are you asking for from them so they can be competitive coming into the situation? Is there a specific type of financing that you want them to have ready? Should they make some certain expectations and have preparations for how much cash they need to have available to have a competitive offer?
Sure.
When they're putting together their BFI with you, that's the buyer's financial information sheet. Is there something in particular that you're seeing that is a commonality with your clients whose offers are getting accepted?
Sure, no, it's a great question. Conventional is the best, but there might be certain markets where the buyer just is not in the conventional buyer pool. There's certain areas of Delaware County where an FHA mortgage is more common than a conventional mortgage would be.
Okay.
So, if you can go conventional, you should go conventional, but it's not the end of the world if you have to go FHA. I think you should still be prepared for potentially waiving the inspections if you're comfortable doing that. I don't know if you're doing this with any of the offers, but there's also other ways to still elect a home inspection without waiving it and make it a good opportunity for the seller still to accept your offer, maybe agreeing that you're not going to nickel and dime them on a deal and have a certain dollar amount on what you're willing to accept the property in an as-is condition after the inspection. One trick that has really worked for a lot of county buyers is the buyer paying all of the transfer tax in the transaction, not just half, which is something that's more common in transactions. So that's another way to win.
Yeah.
And maybe you could talk about that a little bit from a lender side.
I just had a client do that actually last week. We closed on Thursday.
Okay.
And or I'm sorry, Wednesday. The closing was pushed back because there was a storm last week. And so the house that she was buying, stuff fell down from the trees in the backyard. It fell on the neighbor's fence. They had to make sure that was all situated before they went to closing because she didn't want to walk in and immediately have a beef with her new neighbors. But yeah, she came in with a contingency waived for the appraisal to a degree. She said that she would pay $15K over whatever the house appraised for, so that if there was a low appraisal, which it was exactly $15,000 light, surprise, surprise. And she also said that she would pay both sides of the transfer tax. And so I remember even before settlement, when we were reviewing the closing disclosure, she goes, hey, this number looks a little bit higher than I was expecting. It was like, oh yeah, remember you said that you were gonna pay both sides of the transfer tax. I go, oh yeah, I did. That's an extra several $1,000s that you have to bring to closing. But thankfully, my client had just sold a property that she had for years with a ton of equity. She was able to use that equity as her down payment on a new property, and so she had the cash available. Yep. For those who don't know, seller assist is when you're essentially rolling part of your closing costs into the loan. So you're saying, hey, my closing costs are anywhere from 5 to 6% of the sales price. I don't have all of that money right now, or even if I do have it, maybe I don't want to put all of that out of pocket because, I need to buy furniture, pay for moving expenses, all those fun things that are associated with moving and buying a house. And so I'm going to finance part of my closing costs into the loan for the next 30 years. And if that's still within my budget, right, when we talk about the two numbers, right, there's a number that you can afford on paper, and there's a number you're comfortable paying monthly. Well, obviously, if I'm comfortable paying $2,000 a month, and my mortgage payment's going to be $1,900, but I'd rather not come out of pocket with that extra cash, I could say, hey, you know what? Let's bump my payment up to $1,950, and I'll borrow a little bit more money and have a slightly higher payment that's still within my comfort level, but now I'm able to reduce my cash out of pocket. And for a lot of people, that may be the difference between them being able to buy a house or not, frankly.
Yeah, absolutely.
I'm sure you've had clients, I know I have, where they come in and say, hey, I want to buy this house, this is what I got. And I got to backwards, reverse engineer it and figure out how we're going to make the numbers work. So you want to be conscious of that as a buyer. Obviously, as a real estate professional, that's super important. That's why it's so important that real estate agents and lenders work closely together, because we're the dream team, right?
Yes, sir.
If we're out of sync and you're going into a competitive situation, you may lose out on the house just because your agent doesn't know what the heck's going on, or they're not communicating clearly with your lender, and your lender doesn't know what's going on. I've had situations where listing agents called me to verify pre-approvals before they were even considering accepting the offer.
Yep.
And so you want to make sure that when you're working with a real estate professional, hopefully they have people that are local, that they trust, that frankly can hold them accountable, right?
Yep.
That's one of the reasons why we have known each other for years. If I screw up a deal, you're like, hey, Mark, this is my kids can't eat. What's going on here, right? I feel bad, but then also because we have a working relationship, that I'm never going to put you in a situation where I have you working for free, your team's running around doing a bunch of work, and you're not able to make it to the closing table, and vice versa. I know that I'm not going to be sitting here running numbers for someone and we're just wasting time, and it's not actually a transaction that's going to make it to closing. So you're doing what you need to do up front to vet the clients. You're making sure that I'm doing what I need to do on my side to vet them and make sure that the financing is going to work. And then now we're able to move forward and get them out there in the market looking for a house.
Yes, sir.
And so that's super, super important. So what else are you seeing in the market? Because obviously, the market's softening up in Philly. That's great, right? Great news for people who are looking. In the suburbs, for the most part, it's still much of a seller's market. What else are you seeing in the market? Just things that you're like, I've been here for a while. This looks familiar. What are you anticipating? Because everybody thinks, the market's going to crash. All these houses are going to get foreclosed on. There's no point in me buying a house right now. I'm going to buy the same house for $50,000 less next year.
Yep.
What are you seeing in the market that you're like, is that right or is that right? I don't know.
That's a great question. Well, you brought up the deal you had last week where the buyer was going to bring $15,000 extra for the appraised value.
Right.
So, I've said this in other videos. One of the differences between what happened when the economy crashed in 2006, 7, and 8 with that housing market bubble and what's going on now is people have money now. The people that are buying the houses are putting cash into the property, so there's equity in the property. What happened back in 06, 07, 08 is people were getting 100% financing, or they were getting an 80% down loan and then borrowing another 20% down loan. So once again, they didn't have any equity in the property, and the appraisals were just evaluating properties at whatever anybody wanted to buy them at. So it just truly was the balloon that they talk about now. What's going on now is when something doesn't appraise, which happens more often than not, to win the deal, the buyer is bringing the extra cash to the table, or a certain amount of cash to the table over the appraised value price. So that's solidifying the value of the properties in the neighborhood. So that's happening across the board. And in theory, the values are going to hold. There's no reason the values shouldn't hold where they are right now and continue to increase versus some sort of bubble bursting. So I'd say that's the biggest difference between what happened, it caused the crash in 09 versus what's happening now. There's no real bubble. The only thing that's going to shift potentially is that eventually there'll be enough inventory and less buyers that it will turn into a buyer's market, and there will be maybe competitive offers going out, and prices might not be going over ask, but they'll be getting asked or slightly under ask. But you're not going to see a drop off in value. I mean, it's just not going to happen like that, at least over the next year or two. I don't see it happening that way.
Right, and I have to agree. I'm seeing the same thing on my end, working with buyers who are getting financing. That's not, just rewrite a blank check as a mortgage company, right? Like, we have to verify those things. So when we talk about the 4 C's, the collateral, we have to verify that the property that you're getting a loan on is worth what you're buying it for. If you're not, then we're gonna have a problem with that.
Not getting a loan.
And, frankly. And so the mortgage isn't actually based on the sales price, ideally it is, but it's also based on the appraised value. And frankly, the appraised value always wins. So if I'm buying a house for $400,000 and the appraisal comes back at $380,000, my loan is now based on the $380,000 appraised value. It's not going to be based on the $400,000 purchase price.
Right.
So what happens in those situations when you have a buyer that they're under contract for one price, the appraisal comes in lower, and frankly, there's not comps to support that higher sales price. What are you seeing that happens for your transactions?
Depending on the actual transaction and what was negotiated going into the deal, in general, and this is kind of just normal real estate practices, the buyer and the seller will negotiate, and the buyer will usually bring some cash to the table, and the seller will lower it. Now, with these bidding wars that we're talking about, buyers are agreeing to cover any difference in price to win the offer, and you'll see that across the board, depending on where the property is and the type of buyer and the amount of cash they have. So on the seller side, when I'm representing a seller, we're looking at the buyer financial information document and saying, can these buyers cover the difference? Do they have the cash if it does underappraise? Because people are going 5-10% over asking in some of these bidding wars, and we know the property probably will not appraise.
Right.
So we're going into it knowing that, and then we're saying, okay, what buyer has the best opportunity to pay the seller? That's what it comes down to. But in a normal market, when something underappraises, usually the buyer and seller will negotiate and come to a fair term if they can, or the seller's got to meet in the middle. Meet in the middle.
Come all the way down.
Yep.
Right.
Yep.
Yeah, I've had several deals this year that have fallen apart because of appraisals coming in low, and usually it comes apart because, frankly, the buyer just doesn't have it.
Right.
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 And so that's why when we talk about having a conventional pre-approval versus an FHA pre-approval in competitive markets, that's really important because generally, and this isn't always the case, because I have some people that will maybe get an FHA loan because they're buying a 2, 3, or 4 unit property and they just don't want to have to make a huge down payment. But generally, if someone's getting a conventional loan, they're a stronger buyer on paper, right?
Yep.
They usually have stronger credit, they have more money in the bank, they're a conventional buyer, right? And so if someone's a conventional buyer and they're going head to head with an FHA buyer, the conventional buyer is usually going to win.
They're always going to win.
Right. And so that's something where, I've heard people say, well, that's not fair. Life's not fair. This isn't about fairness or equity. This is, the real estate market, and in real estate.
The seller needs to be protected too.
Right.
I mean, it's not just about the buyer buying the house. The seller wants to be certain that the buyer can buy the house.
Yeah.
So it matters,
'Cause they literally have money on the line.
Yeah.
Right. If you have a house for sale and someone says they want to buy it, and then it's time for them to go to closing, and then they call up and say, hey, Matt, my buyer's not ready to go. That's a rough conversation to have with your client, right?
Yes, sir. Yeah.
You're not excited to make that phone call. It's like, hey, see, what happened was.
Well, there's another component too. So it's not just the money, but there's also, as we were talking about with seasonality and how the market was stronger a few months ago versus now, from a seller perspective, when you're looking to sell your house, you don't want to miss the market. And if you go under contract to the buyer that's kind of iffy, And 30, 45 days go by, and Mark calls me and says, the deal's not happening today.
You're like, hey, what are you
It's a
talking
problem
about?
because we're not settling, but it's also, we missed 45 days of other buyers potentially out there that could have bought the property.
Right.
So it's very important that we go with the best, strongest buyer in a situation.
Yeah, that makes sense. And so what we try to do up front is verify all that information, right?
Yep.
We're checking assets, we're checking your income. I've got several clients right now who are either self-employed or they have variable income. I'm getting full underwrites done up front because we don't want any surprises. When someone starts the loan process, it's go time, right?
Yep.
And so if, for you that's, hey, we're under contract, now we're gonna start figuring it out, that's bad, right? You don't wanna be finding out after an offer's been accepted and the contract's been signed, whether or not somebody can get a loan. So as much as possible, you wanna make sure that when you're talking to a lender, if you're a real estate professional, you know what questions to ask. You're asking, hey, did you run automated underwriting up front for this person, right? You know that if I send over a pre-approval, that's already done, right? That's not something you have to worry about. But what if it's a lender that you never met before? Somebody that the buyer found online. They don't, they're not local. You couldn't touch them if you needed to. You have to verify that information up front. Hey, did you verify that this person has the assets? That's, the BFI is really just a stated personal financial statement, right? It's just like, hey, this is how much money I have in the bank. You're not asking for bank statements from your clients to fill out a BFI.
They are supposed to be truthful on it though. So if they disclose false information on it, they could be in jeopardy of losing
what are they
their
at risk?
deposit. They're full deposit.
They're full deposit money. So if I put down a $10,000 deposit, or if it's a bigger purchase, $20,000 deposit, and I said, hey, I have XYZ in the bank, and then we get into the loan process and something happens that kills the deal, usually that's because people do dumb stuff, right? I spent all my money, or I opened up a new account and didn't tell you about it until the last minute, and now that's thrown off my debt to income ratio and I can't afford the house anymore on paper. And you've been untruthful about what you had in the bank when you're filling out your BFI as a buyer. Now that means that Matt doesn't really have a leg to stand on when he's going back to the seller agent and saying, hey, not only can we not close, we need our deposit money back for a mistake that my client made. And if you said, oh, hey, I said I had this money, but I didn't really have this money, that's a problem, right?
Big problem.
So when you're going through the home buying process, this is a very intimate process, right?
Yep.
So I tell everybody, this is like the most intimate financial transaction you'll ever have. I'm asking everything from the rooter to the tutor, where do you work, how long you been there, how much money you have in the bank, how many kids do you have? I mean, we really get into it.
Absolutely.
Some of those things we have to ask for, demographics purposes. We have to put that information in, and the government tracks that, right? Some of that is because we literally need that information to underwrite your loan. If we don't know that, we can't be finding it out later on, right? I've had clients where they said, yeah, Mark, I didn't really want to tell you this, but I figured I should. I'm like, hey, you definitely should. I don't want any surprises when someone's already under contract. So I want you to give me all your information up front. Then we can figure out if there's going to be some challenges, we might as well attack them head on up front. That way, when we're going through the loan process, it's silky smooth. My goal is that from the time that my clients go under contract until they walk away from the settlement table with their keys, that's a seamless process because we've already set expectations up front of what's supposed to happen. You've already done all the due diligence, and your team's done the due diligence up front to vet the property as much as possible. We got a home inspection done. We're going to send an appraiser out there, so they're verifying the property's in livable condition and the property's value. So now it's just a formality. We're moving around paperwork. It's not, hey, I don't know if we can get this house. And so you have to be very forthcoming with your loan professional and with your real estate professional when you're starting the process and throughout the process. If something changes, let us know, because I can't help you fix a problem that I don't know about. And we don't want to be finding it out at the last minute. So a couple other things, just because I love the way that you run your business. I think that's one of the reasons why we've stayed, friends since I met you in 2007 when you had long hair. He had long hair, I had short hair, I have no hair.
I'm trying to look like him, actually. That's what it really comes down to.
He's moving closer to the mean. I love it. What is it about your team? Just because I've seen, since I've been in the business, you beat me here, and I've seen how you've gone from Matt with a couple of people to Matt with a whole team, right? What is it that about your business, the way that you guys do business at Aragona Associates, that you think separates you from maybe some other real estate teams and just in general, your peers in the market?
Sure, it's a great question. Thank you. I think the most important thing that I figured out a long time ago is, we need to educate you as the client on what's going on with the process, and everything we're talking about here is what we talk about on a one-on-one to make sure that you understand what's going on and how you do this, whether you're buying a property, selling a property, buying an investment property, and anything in between. The education's key, and I've committed to that a long time ago, and I believe, just like you said, communication, talking about it, making sure everybody understands what's happening is what sets us apart from other people.
And it's funny that you say that. That's one of the reasons that I feel like my business prospers, right? Is I am very big on communication. I have a problem. I've had this problem really my entire life, but I enjoy, I call it beef, right? I enjoy beef. So if there's a disagreement, let's just put it out there in the open.
Yeah.
If there's something wrong, if you're doing something that bothers me, I want to get it out there. In relationships, that could be a really good thing up front and a not so good thing later on, because it's like, oh, wow, this is refreshing. You tell me how you feel. And then later it's like, could you maybe not tell me everything that you're feeling? But in my loan business, it's done quite well for me, because people are like, wow, Mark, I always feel like I know where I stand with you, right? And I feel like that's the way you run your business. Mm-hmm. And those are the type of people, surprisingly, that I am friends with now in the business. You have to be able to communicate when something's going well and when something's not going so well. I've had situations where in the middle of a transaction, something changed that dramatically altered how the loan was going to work. It may have killed the loan, but it's a lot better to have that conversation 2 weeks in than 4 or 5 weeks in when you were expecting to go to the closing table in a week or so, right?
Yep.
I've had people call me up and say, Mark, help. I just got off the phone with the lender. They said that they couldn't do the loan. My clients got all their stuff ready to move. What are we going to do? And I'm like, hey, well, I'll help if I can. Tell me what's going on. And usually what it comes down to is just poor communication, right?
Yep.
There's some bad information that the lender maybe knew about that they didn't share, or they weren't doing their due diligence, so they didn't know about it until it was too late. You have to work with professionals that understand that, right? This is a large transaction. This is the biggest purchase that most people are going to make in their lives. I treat it as such, right? I take it with that seriousness. But at the same time, I don't drink my own Kool-Aid and think that I'm the only person that can help them out.
Yep.
So I'm not, the guy that's going to call you up and say, if you don't do this now, you're fired. It's not that serious. It's just like, hey, remember when you told me up front that you wanted to buy a house? And I told you that if you did everything I asked you to, that I was going to help you buy a house? I need you to do this. And if you don't do it, I can't help you buy the house. It's real simple, and there's no pressure. Yeah. If you don't want to buy a house, it's okay. I got some other clients, though. They want to buy houses too, right? You got some other people that want to buy houses.
Yeah.
Thankfully, no one transaction is going to break my business, right? But we work all for referrals, right?
Yes, we do.
And so when I'm working with someone, I treat that transaction as seriously as if my own family member was buying the house, because I wouldn't want somebody to be homeless or have to figure out alternative living situation because I didn't do what I was supposed to do. And frankly, selfishly, I want them to be wowed by the experience and come back and say, hey, I got somebody else that wants to buy a house, and you need to help them out because you helped me out, and it was phenomenal.
Yep.
And I think that's why your business has been able to grow. That's why my business has been able to grow. If you don't have someone that they could call up or give you someone to call up and say, hey, you'll have a great experience with me, ask this person, you should probably be a little bit leery, right? Yeah. And that's one of the things that I've seen lately with some of these big banks, right? Oh. The market's been crazy. There's been a lot of activity. You guys already saw the way Matt responded, right? There's a reason why people who work with big banks generally don't have the best of experiences. And it's real simple. I don't think anybody that I've seen has ever explained it this way, but this is just what I've found. If you're working with a big bank and you're got an 800 credit score, you're putting 20% down, you make $100,000 a year salary. Unless you're, got something weird going on that I haven't heard about, I mean, you're going to be able to get a loan with anybody, right? You're what we call an A buyer, right? That's an A plus buyer. Anybody who's going to give that person a loan. Wells Fargo, Bank of America, Quicken Loans, whoever, right? If you've got some hair on it, maybe your income's variable because you get commissions. Maybe you're self-employed and you've got a lot of expenses that you're claiming in your business. Those scenarios are a little bit more outside of the box, right? A bank, they don't want that. Bank of America doesn't really want to do those loans. They'll do them, but they don't want to. They're not seeking that out. And so the people who work there that are answering the phone when you call in and you fill out an application online, they're not doing the due diligence. It's just too much work for them. Frankly, they don't make enough money from those transactions to take the time to pour over your paperwork. And so if you do have unique situations, if you don't necessarily fit inside of that box and you've been told no by a big bank, it may be a real no. It may be an actual situation where you don't fit the guidelines of conventional lending or FHA lending, or it could just be that you don't fit their guidelines, right?
Yep.
Banks and large mortgage companies sometimes have overlays, and their overlays are extra rules. That's literally what they are, extra rules on top of the rules for lending. So if someone fits inside of Fannie Mae or Freddie Mac's rules, which are the agencies that set loan policy for conventional loans, but they're outside of Bank of America's rules, well, Bank of America is going to say we can't do your loan. They're not going to say, hey, we would be able to do your loan, but we have overlays. They're just going to say, hey, sorry, you don't qualify. Peace and blessings.
Yep.
If you get into the loan process and you're self-employed and Bank of America hasn't asked for your tax returns, that's a problem, right? That's not to throw shade specifically on Bank of America. I've seen this at many a bank. They just are one of the offenders that I've seen. But in general, large banks, there's no one there that's accountable, right? Bank of America is going to get 1,000 loan applications tomorrow, just like they got yesterday, and they're going to get the day after, right? If I do a bad job, it hurts my reputation in the marketplace. We're friends, but you're like, hey, Mark, I think you're a nice guy. You can come over to my house sometime for a beer, but I can't give you any of my referrals. Like those are my clients. This is how I feed my family. My kids don't like it when daddy's working and he's not closing deals, right? And so you have to understand who you're working with. If you're working with someone who is not able to go through the correct process up front to pre-underwrite your file, and you've got an out-of-the-box scenario, then you may be in the wrong place. And I've had situations where people told me that, hey, Mark, I'm going to use my bank just because I've been banking with them for a while. I don't think a lot of people realize this. Mortgages are a side business for banks, like literally.
Yeah.
Their number one money maker isn't to do mortgage loans. That's why they can be very specific about the types of loans that they do. Someone who works with a mortgage company, that's literally the only way that our company makes money. If we were bad at it, we would go out of business. Banks can be horrible at mortgages, and they're still going to make billions of dollars a year.
Yep.
That's just the reality of the matter. So you want to be mindful of that when you're shopping for a real estate professional to work with. Do they know the market? Do they own real estate? You're an active investor, right? You're not just a client. You're not just the president. You're a client, right? As they say.
Very true.
So when you have somebody who's actively buying real estate in the markets where you want to buy real estate, they're not just trying to make a sale, right? If Matt doesn't sell you a house today or tomorrow, he's still going to be able to feed his family because thankfully he has a business that's flourishing. He has a team that he's trained. Everyone's doing well. We're rocking and rolling, right?
Yep.
But if he advises you to do something, it's because it was what he would do, right? And then hopefully you're going to do that. You're going to be like, wow, this is great. I had an awesome experience. I'm going to come back and use Matt again. Or I'm going to refer you my friends and family. So you always want to work with people who are operating where, obviously they're able to give you the attention that you need. That's super important, and be professional, but also where they can be accountable to someone, whether that's just to be accountable to you. Because frankly, if I worked at a bank and I was getting, 100 applications a day from people, I might not be able to follow up with people as much as I do now.
Yep.
I'm doing well, but I'm not doing that well. But the reason why I am so serious about it is because this is literally how I eat. If I don't do a good job, I've now set myself up for failure. So be mindful of that when you're moving through the marketplace. You also want to ask questions. If you're reading paperwork and the numbers don't make sense to you, you don't want to be asking those questions when you get to the settlement table. It's the wrong time to be figuring things out, right? So if you are being sent documentation and they say, hey, you need to sign here, here, and here, you might actually want to read that stuff. That's like super important, especially if you're getting a loan for the next 30 years.
Yep.
It's pretty important.
So I have a scenario that just happened to a couple buyers of mine. So they were working with an online lender.
Okay.
So right off the bat,
Red flag
Red
for you.
flag, awful. Now, it seemed okay in the beginning, but you know, the problem with online lenders when you're looking at it, when you're trying to compare, should I go with Mark or an online lender, is they might have a better interest rate. They just might, right? It's a possibility that they'll probably.
They have less overhead.
Yep.
They don't have to pay a guy like me. Yeah.
So you might go that route because you're saying, I'm going to save $50 a month for 30 years, right? So this bank that we were working with,
It's like an extra. That's like an extra eat out at Front Street Cafe.
totally.
Yeah.
So the thing that, other than just you're winning with the interest rate, what Mark's talking about and what's key about this is that you have a direct channel to what's going on with the transaction the entire time from the lender perspective. And what happened with this online bank that we were talking to, they seemed great in the beginning, and then when we actually needed answers, they were unwilling to give us answers because I would call them up and we're only allowed to talk to the buyers, which if I need an answer,
Right.
you can tell me what's going on with the deal, right? Because
Right.
you can. There's not any red tape with you not being able to tell me that
like
we're working
not
on the appraisal.
I don't have to disclose their financial.
No,
their
but you
personal
would let me know
financial
what's going on with the
information
deal.
to let you know.
Yeah,
Right.
you would let me
Yeah.
know what conditions are remaining.
Right.
Right? Nothing. They dead silence, and it almost jeopardized the deal because I need to be able to convey to the other side of the transaction what's going on. And when I can't do that, the seller is going to say, well, then we're going to terminate
They
because
lose confidence.
Yeah, why would they have confidence? So when you're thinking about a little bit extra money or a smooth transaction, I say this to my clients every time: a smooth transaction is what you should be looking for, and that's what you're talking. Excuse me, that's what you're talking about.
I saw a quote today. I reposted it on my Instagram. It says, "You always pay twice for cheap."
Yes.
Right? Because
Yes.
you're paying for the service, right? And I mean, in the mortgage process, just like with real estate sales, we don't get paid unless you buy a house. So you're not necessarily cutting us a check up front. I wish I could. There's some people that I definitely would have charged extra, but we only get paid literally when we help you buy a house. So if you are saving, as you said, $50 a month, it seems like really appealing. Like, hey, I'll save $50 a month. I'll go with this guy. Well, what is that? What are you sacrificing? What are you giving up to save that $50?
Yeah.
It's usually going to be service.
It's always service.
Right.
It's always service.
And access.
Yeah.
That's super important. If you're dealing with a lender where you can only reach them during, 9 to 5, Monday through Friday.
Pacific time.
Yeah, Pacific time. A lot of what we do happens in the weird hours, on the weekends, in the evenings. That's when, hey, we just came from the home inspection, and something's going on. Help, fix it, Mark. All right, hey, it's 6 o'clock on a Tuesday. That's all right, because again, we treat this like what it is. It's a big deal for our clients.
Yeah, it's one of the biggest decisions they make.
Right.
Yep.
So be mindful of that when you're determining whether or not you want to work with a company or a particular service provider when it comes to a purchase like this. Yes, the idea of me saving $50 a month sounds really exciting. But if I have a nightmare experience or I lose the house of my dreams because the deal falls apart, am I really going to be excited about saving that $50 a month?
Yeah.
Probably not,
Nope.
right?
No.
I think it's safe to say that there's real estate professionals that are cheaper than you, right? There's some of these discount brokerages they could go
Yes.
to and,
Yeah.
oh, there's no listing commission, we'll just figure it out on our own. Well, you're figuring it out on your own.
Yep.
You don't have someone who's worked on literally hundreds of transactions that can help hold your hand and shepherd you through the process. So be mindful of that. For
Totally.
sure.
Absolutely.
Yeah. Is there anything else you want to cover? Because I like to say that the reason why we're bald is because our brains are exploding with information, and so the hair can't live there.
I'll go with that.
Yeah. That's what I feel in my heart.
I'll start using that one.
Yeah.
Question for you: where are interest rates today?
That's a really good question. So interest rates are always wherever your credit is, right? If I got phenomenal credit, interest rates are always low. If I don't have great credit, then they're still frankly low. Right now, rates are about as low as they've been outside of last summer, right? And so last summer, after we got through some of the turbulence in the market post-COVID, hitting, interest rates plunged. One of the main contributing factors was because the federal government was buying mortgage-backed securities like they were going out of style, mainly because private investors didn't want them. So the institutional investors that usually buy mortgages, they literally buy them in tranches and they service those loans, and that's how they get their return on their investment. The stock market was up, so they were like, hey, these investments aren't as attractive anymore, so we're not going to buy them. And they don't have to because it's their money. So the federal government stepped in and was buying them, and that caused interest rates to plummet. And so a lot of my clients refinanced. People that bought their house a couple of years ago, the combination of low interest rates and property value soaring. I had friends that were able to refinance houses and get rid of their mortgage insurance after a couple of years, which is crazy.
Yep.
That was awesome, right? Now we're kind of leveling out a little bit. Rates have been steadily climbing. I think I just had somebody that closed last week. They were maybe like a 2.875. That was like an A+ buyer, right?
It's crazy.
20% down, 800 credit score. I got somebody else that I think I locked this week at maybe 3.125. I think they were getting like an FHA loan, and their credit wasn't phenomenal. So most of my clients are still in like the high 2s, low 3s for 30-year loans.
Yep.
If they're getting a 15-year loan, I mean, they're like in the 2s firmly, which is bananas to even say out loud.
It's free money.
Yeah, when I got into the business, I mean, this was not that long ago, but I mean, most of my clients were like in the 5s, high 4s, low 5s.
Yep.
And now the fact that, rates are lower than that is insane. So we love it, it's great, but it's created some challenges in the market for sure. That's a reason why there are so many buyers, because the cost of borrowing money right now is way low. And the reality is it's not going to stay like this forever, but as long as it is, the answer to the age-old question, should I buy a house now or wait until the market plummets?
Now.
If you can buy a house now.
Yeah.
Right?
And that kind of brings it full circle what we were talking about in the beginning. Like, interest rates are still crazy low.
Right.
And inventory is softening. So now is the sweet spot, whereas 3 months ago when you were like, I'm not overpaying for a house, you might not have to overpay for a house right now, and you're still getting the benefit of the interest rate.
Yeah, when we talk about the costs associated with buying a house, or how much house am I approved for, right? I gotta talk to you about that later. I got an idea. We'll work on that off the books.
You lost more hair there.
Yeah, brain's exploding. How much house you can afford isn't really a sales price. It's a monthly payment.
Yep.
Right? So if I'm buying a house in Philadelphia County for $400,000, my payment's not going to be the same as it is in Delaware County or Montgomery County, or I'm also licensed in New Jersey. Are you guys in New Jersey?
I have team members in Jersey.
Hey, that's what I'm talking
Jersey,
about.
Jersey, Delaware.
Tri-state connection, baby. Let's go. So when you're buying houses in different markets, that buying power is going to be different because property taxes are higher or lower. Just in general, different property types, right, are going to be more expensive in one area compared to another.
Yep.
Buying a single family house in the suburbs naturally is going to be a little bit more expensive than buying a house that's a row home in Philly in general, right? So you have to be mindful of that. And when you're setting down and saying, hey, we want to buy a house, figuring out how much house you can afford, that's not really something that we do. We can tell you what a payment will get you in a particular area, but I can't tell you how much house you want to pay for each month. It's not even responsible of me. You can afford a $500,000 house, so you should get that. What if that would be more than you're willing to spend and would throw off your monthly budget for your finances? So you want to have an idea of what payment you can afford, and then you consult with a real estate professional and a mortgage professional, and we back into that number based on that, right?
Absolutely.
So in summary, Philadelphia, right now the market's softening. That means that it's shifting away from a seller's market back towards a buyer's market. If you are ready to go, you look good on paper, chances are you're going to be able to get a competitive offer accepted, but not something that's going to be unfairly against you, right? I'm not having to waive all my inspections and say, hey, I just going in here blind to figure it out. If you're looking in the suburbs, because there's less sales activity, it's probably going to still be more of a seller's market. You're going to have to be prepared to go into a competitive bid situation most of the time. And ideally, you want to have a conventional loan pre-approval because that's going to make you look stronger on paper. Obviously, we don't think the market's going to crash anytime soon. Not to say that we have a crystal ball. If we did, we'd be very rich men. We still work for a living. But the conditions that are happening in the market right now are not like what was happening back in 07, 08, 09. We are seeing that there's way more buyers who are qualified that are looking for houses than there are houses available for sale. That's one of the things that's creating all the sales activity, right? And people have cash, right? They weren't able to go anywhere for a year, People were just sitting at home making money. Some people were making more money than they ever have, right? So if you've been in a business where, you know, the industry's up because maybe you work with video conferencing, or you work with tech where you're enabling people to be remote workers. These have been really lovely times for you, but you haven't been able to travel. You know, people haven't been able to go out and eat as much as they want to. That's usually my biggest expense in life. They have more cash. So that means people are a little bit more well capitalized. They may have properties that they're selling where they have a ton of equity because property values are up. So it's actually benefiting them and hurting them at the same time. Benefiting them if they're selling a property, hurting them if maybe they're looking to buy a new property. And frankly, interest rates are still historically low. So you have a lot of buying power for the most part if you're going out as a buyer into the market. So be mindful of those things. And again, always, 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 whenever possible, use a local professional when you're making the biggest purchase of your life, right? Because you want to make sure that you're working with someone who knows the market. They can anticipate challenges that are going to come up when you're starting the house hunt during the home buying process, and they're able to get you to closing with as little stress as possible. This is a complex transaction. Yeah. Things happen. We're prepared for that, right?
Yep.
But our job is to minimize those surprises as much as possible and make sure that you're able to get to closing and you get the house that you're really excited about. So if you guys have any questions, you're looking for some information, Matt, how do they get a hold of you and your team?
Direct message Mark, put him in touch.
Oh, I love it. I love it. See, I'm the plug. He didn't say it, or I didn't say it, he said it. If you guys have any questions, you can DM me at mark.loans or schedule an appointment. The link's in my bio. We're really excited to help people buy houses this year and next year because we have businesses that are set up to do that.
Many years to come.
Many years to come, yes. My godson is growing at an exponential rate, so I have to keep him fed. He's getting big. My godson's going to be 1 in 2 weeks, and he's 27 pounds.
Wow.
Yeah.
Big guy.
Yeah, I didn't know that that wasn't normal. I was not hanging around a lot of babies, and one of my friends told me that's a big bleep baby. I was like, oh, okay. Well, how about that? So be mindful of that. You know, we're trying to help my godson, you know, keep those clothes on him because he's already wearing size 24 months at 1 year old. So I'm glad you guys tuned in. I'm Mark Brown, Matt Aragona, Aragona Associates with Compass Real Estate. We're happy to be your guide to local Philadelphia real estate and the tri-state area, PA, New Jersey, and Delaware.